Welcome, everyone. My name is Niels and I'm an assistant director here at the Atlantic Council Geoeconomic Center. Today, we're diving into our China Pathfinder project, a multi-year research effort by the Atlantic Council Geoeconomic Center and Rhodium Group designed to track and unpack the Chinese economy and benchmark it against the top 10 OECD open market economies. Now, each year we produce an annual report we release in the fall and then regular updates throughout the rest of the year. Today, I'm joined by Nargiza Salidjanova, project lead from Rhodium Group, to discuss the major trends within the Chinese economy in the second half of 2022. Nargiza, welcome.
Glad to be here, Niels.
So we've seen some major policy shifts over the past year. Just to name two, we had the 20th Party Congress earlier this fall, where Chinese President Xi Jinping was given an unprecedented third term as leader of China, as well as towards the end of the year, a rather chaotic exit from zero COVID, which China's been adhering to for the past 3 years. But Nargiza, what are the policy trends that you've been tracking? What are the top lines that you've seen over the past half year?
So the second half of 2022 is a real study in contrast, right? We see this incredible effort by the government to present a united front, to show strength, to show confidence and competence. And then we see the chaotic exit from zero COVID at the end of the year, which showcases almost none of those things, right? There is a sense of haphazardness, there is a sense of unpreparedness, there's a health crisis that emerges in China just as the country is really not prepared to handle, burgeoning infection, is not really handled to prepare for the disruption that happens in the economy because of that. At the same time, we clearly see from the government an intent to stabilize the economic situation, right? The Chinese government is very aware, despite their efforts to suppress bad economic information, they've had, some really not great outcomes. And so we see this stabilization message being pushed at every turn, trying to talk up the importance of the private sector, trying to talk up the importance of foreign investment.
Great, and I really want to zero in on kind of zero COVID. It's really driving the news trend right now. It's something that'll set the tone for Chinese policy going into 2023. So I was wondering if you could talk a little bit about what drove China to move away from its zero COVID policy towards a more kind of containment or live with style policy that the rest of the world is sort of embracing, and what that kind of says for the rest of Chinese policy making as we enter 2023.
As is the case in most things, there isn't a single factor, right, that precipitates a decision as significant as turning away from zero COVID. We know that. But certainly China's economic weakness was very much on the minds of Chinese policymakers. They see very well what's happening in the economy. They see the sort of the discouraging effect that zero COVID has had on foreign investors. They see the discouraging effect it has had on foreign and domestic business sentiment, and they wanted to do something to remedy that, right? At the same time, we see kind of a real effort to try to talk about private sector investment, right? There is a slate of policies that come out to encourage or to support domestic companies. There is almost an official pronouncement that the tech crackdown is over. Remains to be seen what that actually means, but at least they're trying to message that the sort of the turbulence, the time of crackdown, the time of disruption is coming to an end. So
building off of that, zero COVID undoubtedly had disastrous impacts for the Chinese economy overall. This is the first time since 1989 that Chinese growth came in below target, and China's really doing everything it can, as you say, to sort of restart its engines of growth. Can you talk a little bit about kind of the key policies that you're tracking that China will likely implement to rebuild confidence within its economy as we enter 2023?
Of course. In the update, in the Pathfinder update, we really call them the two confidences, right? The need to restore confidence in the foreign investor sentiment and the need to restore the confidence in the domestic economy. And this is both on the household and on the company side. And let's take a quick look at the data here, right? Looking at the investment picture, in this chart, you see an official estimate. So that red line is from MOFCOM. And then you see unofficial estimates of foreign direct investment flowing into China. And they tell a very different picture, right? The official line, very optimistic. This is yet another example of the government, trying to nudge the message to portray a very positive outcome, where the reality is very different, right? And we see Chinese leaders at the highest level going out, trying to really talk up the message that foreigners are welcome, that China is open for business. We've recently just seen Liu He at Davos say all the right things. Investors will remain cautious. They want to see the action that matches the message. They've kind of read the story before. They really want to see a return to structural reform. And then looking at the domestic side of the picture, here this chart, I love this one. It shows the sentiment in a Chinese household. This is a PBOC household finance survey for their household job and income expectations, right? And again, the trend line is very startling, a clear downward trend. This tells us two things. Chinese households are not feeling confident that their job expectations and their income expectations are going to be very high, right? And they're also not feeling very confident that the economic situation overall is going to improve for them. Zero COVID is not the only reason for this, right? Chinese household consumption has always been something that the government has struggled to increase significantly. Not least, the crisis in China's real estate sector is contributing to this, because real estate is a major store of value for Chinese households, and when they see this sort of trials and tribulations, they don't feel very wealthy, and they become less inclined to spend.
Wow, both of these are fascinating charts and really paint a very different picture than I think most markets would like you to believe as China reopens. Thank you so much, Nargiza, for joining us today and unpacking our most recent update to the China Pathfinder project. To read the full report, please go to chinapathfinder.org, where we'll continue to follow the Chinese economy and produce updates around China. Thank you so much for joining us, and have a great rest of your day.